Yeah, 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 yeah. Oh. Yeah, 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 yeah.
Welcome back, Mr. Swing Trader. Thanks for watching my last video if you did. If you're new to the channel, I post videos about my investing journey every week. So in this video, I'll be talking about 3 ASX stocks to consider in June 2020. I'll be going through the technicals of 3 stocks and why I think they have good upside potential to moon. So now there's going to be some viewers saying,
"Oh, Mr. Swing Trade, what about fundamentals and investing for the long term?"
Screw fundamentals. I'll be either driving north to the yacht store or south to the welfare office.
Right, so fundamentals tell you what to buy, technicals tell you when to buy. Just to clarify, this isn't financial advice. I'm hoping to give you guys trading ideas that you might not have thought about, or ideas that you want a second opinion on. So hopefully you guys get some ideas out of this video. So the first stock we'll go through is CSL, the market darling of the ASX, the current number 1 market cap on the ASX. So CSL, for those that don't know, is a global biotech company that researches, develops, manufactures, and markets products to treat and prevent serious human medical conditions. So since the price has declined in the past month to the technical levels of around $270, which is where the key resistance are, there's 3 important elements to a fundamentally sound company. So the first being increasing revenue, increasing profits, and then also positive operating cash flow. So why these 3 elements? I'll briefly explain once we go through CSL. So we can see CSL is increasing revenues every year, showing that there's growth in the new and existing products. The second key element is profitability, and again CSL is increasing their profits every year, so that's a good sign. Increasing profits show that their products are actually continually profitable, and they aren't making any losses on sale, which is a good indicator. And the third key element is operating free cash flow. So free cash flow is important because it allows company to pursue opportunities to enhance shareholder value. And without cash, it's tough to develop new products, make acquisitions, pay dividends, and also to reduce debt. So all in all, this company is fundamentally sound. So my only concern is when the right time is to buy. And this is where technical analysis is important. So right now I'll put up a technical analysis of CSL Ltd. So there's not too many indicators on this graph. There's only one indicator, which is the weekly moving average. I've used 50-week moving average. So we can see that every time CSL share price touches the 50-week moving average, it seems like a good indicator of when we can actually purchase the stock. So at the 275 region, it's a key resistance level. We can see that in the past, if we look to the left, there's been market participants that are willing to buy at the 275 level. So with a price target of 330, that gives us an upside of 20%. Just to make it more comforting, Goldman has a price target of 336. So we can use that as a second opinion, which is extremely comforting. So in my opinion, CSL at these prices are considered low risk. It has an upside of around 20% with a price target of 330, and Goldman has their price target at 336. The risk level is considered low, and the reason for purchasing the stock is that it's hit the 50-week MA, and plus also it's at a key resistance level as well. The biggest risk for CSL is slowing growth in their business, so that will lead to a different PE ratio. At the moment, their PE ratio is quite a lot higher than the industry standards because of the expected growth and outperformance to their peers. So the second stock is SCG, Scentre Group. I've mentioned this in my previous video. So Scentre Group's a retail destinations operating under the Westfield brand in both Australia and New Zealand. So their business model is undertaking ownership, development, design, construction, property management, leasing, and marketing activities for its centres. Alright, so let's look at the revenue and net income for SCG. So the total revenue has increased slightly from 2016, but still staying around the region of 2.5 to 2.6 billion. In terms of net income, they've still been able to produce a positive net income, but it has decreased significantly from the past, from 3 bill to about 1.2 bill in the previous year. The reason being that is due to their other income. So we can see that in terms of other income, it fluctuates a lot over the last couple of years. It's actually decreased quite a lot since 2017. But in terms of operating income, it's been quite stable from 1.6 to 1.7 billion. So if we exclude other income, it's quite stable. Then now let's have a look at the free cash flow. So from 2016 into 2019, free cash flow has slowly increased from 1.1 to about almost 1.3 billion. So in this graph, it shows a 10-year time frame of the share price of SCG. We can see that there's 3 key resistance levels. So the first level is around the 235 to 237 zone. So if we look to the left, there's been a lot of support around this level in the past, and also for $3 and $3.70. When we zoom into the 1 year time frame, we can see that 370 acts as a key support level for previously in the past year. So once the coronavirus hit, the share price just started dropping until it was in the 140s. So that's where the market has found some support. We just use the Fibonacci tool from top to bottom. We can see that the market has returned to the 0.236 level and has found some support there, and it's also tried to break the 382 level. So in the last couple of weeks, it has broken that level, and it's moved towards the 0.5 level. So one of the key levels in a Fibonacci retracement is 0.618. I don't know why, but this is what they say in the textbooks, and I'm a monkey, so I just follow what the textbook says. So at the moment, it's touching the 0.5 levels, and I'm hoping to seek that there will be some retracement to 0.382 levels before retesting 0.5 and going to 0.18. The upside for SCG is 15 to 50%, with 50% being on the optimistic end. Price target is $3 and $3.70. Goldman has their price target at $3.74. The ideal entry would be below $2.37. Risk level is medium to high, and reason for buying is buying the dip. The price target takes into account that there will be a slowdown in retail sales and also leasing shortfalls and cost overruns for SCG's development pipeline. It should also be noted that SCG has taken cost-cutting measures that targets 25% reduction of its current costs. So the key risk here is a lot more slowdown in retail sales, leasing shortfalls, and also increasing cost overruns for SCG's development pipeline. So the third and final stock is AIZ, Air New Zealand. Airline stocks this week have made a massive move upside with news of restrictions easing. New Zealand has also announced that there will be no restrictions for domestic travelling, but borders will still be closed for international travelling. So Air New Zealand has announced a plan for the next 800 days and detailed what is to take place for the airline to survive, revive, and finally thrive. So I think this is a catalyst for an impulse to move towards the upside. Let's look at the revenue for Air New Zealand. We can see from 2016 to 2019, the revenue has actually been increasing at a nice and stable rate. We can see that their net income has slowly been decreasing, but however, their free cash flow has actually been increasing by quite a lot. Let's take a look at the graph. So there's 2 key resistance levels here. The first one being at $1.63, and the second one being at $2.15. Again, using the Fibonacci tool, we can see that it's hit basically almost spot on with the key retracement levels of 0.382 and 0.618. So it's been trying to break the 0.236 retracement for the last couple of months. Finally, it has broken and it's hit the 0.5 level, so we can see that there has been some rejection. The upside for AIZ is 25 to 65%, price target 215. Ideal entry point would be below 130.5. Risk level is medium to high. Reason for buying is buying the dip and hitting a key resistance level. The key risk here is having less travelers than expected domestically and the unknown time frame for opening up international travel. Hopefully you guys got some ideas out of this video, and if you're interested in my portfolio update, then please keep watching. Currently the portfolio is sitting at $67,946. This week has been a flat week. I've made quite a few purchases and a sell as well. So this week I've sold MFF Holdings, which is the Magellan flagship fund. Main reason being they are holding 47% of the fund in cash, so that's not particularly ideal for me. So I sold that and got about $9,500 from it, and $5,000 of that I put into CSL, and the other $4.5 I put into Kathmandu, so that's KMD. I totally regret buying Kathmandu. That was a FOMO buy, so a lesson for you guys, I guess, is don't buy on a double-digit green day. Buy when it's a red day, basically. This week on the ASX, it's been a bad week, so a loss of $700. If we exclude Kathmandu, we'll probably be flat. On the Nasdaq, we're up $170 on Facebook and $520 on the New York Stock Exchange. The main driver being UPRO with a $370 gain. I forgot to mention that I also added Sizzle to the portfolio, so I made an extra contribution of $2,000 to the portfolio also as well. Now I'm going to filter for since first purchase. For CSL, I bought this yesterday and now it's up $103. Digger Data is up 5.8, including dividends. I bought Digger Data a couple years back, and haven't sold it, so that's probably why there's such a large gain just sitting there. Kathmandu lost $750, 1.4k on Macquarie, 400 on SCG, 302 on Sizzle, 1.2k on VGS. That brings us to a total of 8.7k in total returns. On the Nasdaq, there's only Facebook that has returned 850. And on the NYSE, it's 1.1k in total returns, mainly because of TMF and UPRO. Down 400 on Revolve and up 300 on Realty Income. If you guys enjoyed this video, please don't forget to smash the thumbs up button and also to subscribe as well. I'll see you guys next week.